people are still kind of stuck in these, fiat currency silos. And they have the continued risks of debasement and siphoning off of value towards the top, and all sorts of problematic cross-border things and censorship. On one hand, it's funny because the more countries try to use the negative powers of CBDCs, the more they make it obvious to people why they would want to leave that system. So it's like the worse they make their product, the better Bitcoin looks. Whereas if they make the product and it's very benign, like say the United States today or Europe today, like it's our systems in a lot of ways suck, but they're benign enough to a lot of people that they don't see why they need Bitcoin, especially when you have Bitcoin is taxed. Bitcoin has a little bit more of a UX challenge. Bitcoin, when you factor all those things in, people consider the current system workable enough.
Cryptocurrency companies and other businesses holding significant digital asset portfolios are on the brink of a major accounting overhaul. U.S. accounting standard setters have unanimously voted to introduce new rules, anticipated to be formally published by year-end, that mandate companies with crypto holdings to report their assets at fair value. This approach aims to capture real-time asset values, factoring in market fluctuations, providing a more accurate representation of their worth. While these standards may bring added volatility to the financial reports of crypto-heavy companies, they also offer an improvement over current reporting practices, with the ability to account for asset value recoveries. These regulations are set to take effect no later than 2025, with the option for early adoption available to companies. The decision by the Financial Accounting Standards Board is seen as a pivotal step toward mainstream cryptocurrency adoption. Jeff Runlett, head of accounting strategy at CryptoCorp, an accounting software company specializing in cryptocurrency, sees the proposal as a positive development, especially for large corporations that may have reservations about holding cryptocurrencies on their balance sheets due to technical complexities. Beyond accounting changes, the document also delves into Lyn Alden's analysis of Bitcoin's core principles and use cases within the ever-evolving financial landscape. It highlights the long-term impact of Bitcoin while acknowledging potential risks the cryptocurrency might face.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
For thousands of years, basically, humans have been trying to make gold and silver easier to use, right? So they have various divisibility or transportation limitations. And so for thousands of years, proto-banking has been a convenience tool over that. And in the past several centuries, full-service banking has been a more elaborate tool over that. But the problem is that increasing level of abstraction basically caused major issues between the amount of claims for those metals and then underlying metals. And then this all expanded dramatically during the telecommunications era. So ever since the telegraph became implemented throughout the second half of the 19th century. And during that environment, they were eventually able to just drop precious metals altogether. And so we've been in this system where physical money is too slow to deal with the modern global economy, but these fiat currencies are too arbitrary, inflationary, and have other issues to serve a similar role. And of course, the problem is far more compounded in the long tail of developing currencies, because the current market is basically 160 different fiat currencies in the world. The top handful lose value slowly, and then for most of the others, wherever you are born in the world, you're in this like little currency monopoly. And if you happen to be born in a bad one, then accumulating capital is way harder than it should be, and all the global payment frictions are way harder than they should be. The challenge is that most of these solutions that made money easier to use were centralizing. Mm-hmm. And with centralization comes corruption and basically more ability to play games. And so what I think is relevant about Bitcoin as the first time where hard asset, bare asset money can move at the speed of telecommunications globally. What that does, it's one of the first technologies in money that can improve it that's not centralizing, that's arguably decentralizing. And that's what makes it different than, say, the past 200 years of monetary innovations. And I think the challenge, what we talked about before, the concept of technological determinism, which is that if we were to rerun humanity multiple times, would this be like a weird anomaly that happened, or would it usually end up like this? And my argument is it would normally end up like this, like the set of technological capabilities combined with incentive structures and human greed makes it really hard to run a money system when transactions can move at the speed of light, but physical settlements of hard money can't. So this century and a half window is a weird window to navigate, but it's a window that would come up over and over again for any civilization that reaches this type of complexity. And what's interesting about Bitcoin is it's potentially the closing of that era. If it's successful in the longer run and at scale, then it's the first time where digital settlements are just as fast as digital transactions, basically, and that can de-abstract, simplify, and decentralize the money system. The challenge from Bitcoin, and one of the things that the critics have pointed out from the beginning, is that no one stops you from making a duplication of it. There's no limit to how many different cryptocurrencies can exist, and so they rely on network effects, depth of liquidity, their own unique properties to establish such a degree of dominance that near identical new entrants are not really going to have a chance. Right. And so this is kind of this bootstrapping period is this phase where we see if the technology is strong enough to resist all those types of challengers and establish a certain degree of network effect and liquidity and dominance and all that in order to become truly scarce and gold-like. And again, I would defer to technological determinism in the sense that I think anytime this type of technology gets developed, if we were to rerun these past 15 years multiple times, I think you get an explosion of shitcoins like every time. I think we were lucky that the first one was good. I mean, I can imagine worlds where the first one was not good and like it had some sort of big flaw, or Satoshi's a scammer. He's smart but not ethical. And you can imagine different scenarios where maybe the second or maybe the first one's not the one that achieved critical mass. But we were in one where it is. But I think it's natural that people are going to experiment. I think we have to try all the wrong answers to prove why the right answers are they are.
As per a report from RBC Capital Markets, the Federal Reserve is poised to pursue a cautious and gradual approach in the development of a central bank digital currency. This report, published on Wednesday, examines the potential ramifications of a US CBDC on the financial system, the broader economy, and the Federal Reserve's monetary policy. It also draws comparisons between the U.S. strategy and that of other nations, particularly China, which has been actively testing its digital yuan. Within the report, there's an exploration by Lyn Alden into how CBDCs may pose risks to Bitcoin and why the Federal Reserve would exert considerable efforts to ensure Bitcoin's survival remains uncertain. According to Alden, while the Federal Reserve may slow down Bitcoin's progress, it may not have the capability to halt its trajectory. Let's continue with the video.
So I think that there are a handful of risks. I think that, as we talked about earlier, that dilution risk has always been a major risk. It's always the question of, is Bitcoin good and unique enough to crowd out everything else and to achieve a depth of liquidity and network size that makes it uncontestable? And so far it's been able to do that. It's only ever really had one challenger of anywhere near the same scale. No other one even comes remotely close. And so it's so far it's done very good in that track. The other areas are, if major governments got very aggressive on Bitcoin, like if you had the United States and Europe just kind of take their gloves off and just try to go full, like just try to kill this thing as much as possible. I don't think they'd be successful, but I think they could slow it and cripple it enough that it could greatly extend. Basically, all the risk would massively amplify, and the duration of the whole project would be extended. Now, part of the incentive mechanisms, especially in relatively free societies, is that there's a lot of mechanisms that prevent that from working. When we look back at the era of America's gold ban from the 30s to the 70s, they did that with a supermajority. So FDR, when he came into power, at one point in Congress, he had something like 70% of Congress was on his side. That was kind of an unheard of level of concentration of power, like a supermajority. So that's more of an exception to the rule. It's very hard to do that kind of thing without that sort of unusual supermajority in these types of countries. So it's something I monitor, but it's something to consider. But I think in some ways, another risk I look at is the supply chain risk. So the fact that only a handful of foundries in the world make high-end semiconductors. This is not just a Bitcoin problem. This is like a tech concentration problem, especially given current geopolitics. But one of the clever ways governments could try to attack it is going after the supply chain and control the production of ASICs. That's one of the weak spots. And then I think lastly, it would be things like unforeseen technical bugs that are bad enough to damage Bitcoin's reputation. So if there's been bugs in Bitcoin's past. Luckily, none of them were catastrophic, either because they were fixed quickly or ahead of time. Over time, the code base is hardened, but there's still ongoing risks of any sort of live project. And then, of course, there could one day be a quantum threat, and then there might have to be some sort of fork to make it resilient to that. And that's like a period of time. Anytime you have to change, that'd be considered like a shields down moment. Like there's a period of vulnerability there where consensus could differ. There could be schisms, there could be challenges to make that possible. So I think it's not a risk-free asset. It's something that has to be monitored, but that I think all the pieces are there, and I think it at least has the tailwind of technological determinism on its side, which is not necessarily to say that Bitcoin has to win, but that this kind of technology I think is in some ways inevitable, and if you kill it, it'll try to keep coming back. It's something that exists now. It's out of Pandora's box.
Currently, U.S. accounting lacks clear guidelines for companies like MicroStrategy, Tesla, and Coinbase in recognizing and valuing their digital currency holdings. They typically use a practice guide treating most cryptocurrencies as intangible assets, recording them at the initial purchase price and assessing them quarterly for impairments, which can't be adjusted upwards even if the market recovers. However, new rules are on the horizon. These rules, which will be mandatory for all companies starting in 2025, require disclosing significant cryptocurrency holdings and any associated restrictions each reporting period. Additionally, companies must reconcile or disclose changes in their crypto asset balances by category. While these rules aim to improve financial reporting transparency, their direct impact on cryptocurrency prices is expected to be limited. Instead, they may indirectly influence investment decisions and market confidence. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.